Hi, Jim Gore from Thor Wealth Management. Back in December of last year, we had a market update that was espousing MLPs, and what I wanted to do was give you a 6-month update from where we are and how MLPs are performing and why we still like that investment. So if you look at how MLPs have done since that video came out on December 17th, you can see here by the Alerian MLP Index that they're up about 20% since that time period, almost double that of the S&P 500, and 3 times better than the QQQ, which is basically the NASDAQ. So MLPs are doing better than the rest of the market, and we think that this is going to continue for 4 reasons. First of all is valuation. And what we did here is update a chart that looked at the price to discounted cash flow. And right now we're selling at 5.4. So it's a little bit more expensive than the 3.8 back in December, but we're still below the valuation levels back in 2008, 2009 at the bottom, which was 5.6. And historically we're at about 9.9 is what MLPs should be selling for. So in other words, these things can go up almost 100% to get back to historical valuations. So they're very cheap. But cheap doesn't necessarily mean that that it's good, because if the business is failing or they're not growing their cash flows, then that's not good. But the interesting thing about MLPs, and this is the second reason why we like it, is that if you look at their cash flow over the next several years, you can see here they've already built out the pipelines. So now the cash flow is going to be good, and it's going to be increasing over the next 4 to 5 years. As a matter of fact, it's going to get up to almost 3 times that of the S&P 500. So, if you ever watch Shark Tank, which is a great show to watch, it's a good show to teach about business. You always hear them saying about, hey, when am I going to get my cash back? When am I going to, I want cash flow. How are you going to pay me back? Well, if I was Mr. Wonderful, what he should be looking at in the markets right now is investing in MLPs, because your free cash flow is going to be 3 times that of the S&P 500. So cheap, free cash flow. Third is the dividend yields. The dividend yield is still close to about 10% on the MLPs, which is much better than anywhere else in the markets right now. So you're getting paid to own these investments at the current rate. And lastly, and this is something that a lot of people don't know about the MLPs, is that the MLP's cash flow is inflation protected. What that means is if inflation goes up, they get increased payouts on the pipelines. So what that means is the cash flow would actually increase higher, so you have protection against inflation in the future. So the reason why you want to own these, cheap, good businesses that are increasing their cash flow. They have great dividend payouts today, much better than the rest of the market. And lastly is that they give you inflation protection. If you don't have MLPs in your portfolio, you should really consider putting those in your portfolio, especially if you're investing in fixed income. This is a great investment for the future. If you have any questions or concerns, as always, reach out to us, and we'll be here to help you in any way we can.